Good morning, student. My name is Vinay Viashwanath Gawas. I am the teacher trainee of Viashwanath College, Kankavli. Today, I will be taking your accountancy class. But before starting the class, I want to give you some instruction. During the class, I will ask the question to anyone, but while answering the question, you have to unmute yourself and see that there should no disturbance while answering the question. All students are promoted from SSC standard. So now you have chosen a commerce stream. But did you know what do you mean by a commerce, or how the commerce subject it is all about? What is the scope in the commerce subject? But before starting this class, I want to show you one small video regarding the commerce studies.
Emergence of commercial cities like Harappa and Mohenjo-daro in the 3rd millennium BC, the period was marked by extensive commercial activity and urban development. These civilizations promoted commercial links with Mesopotamia and traded in gold, gemstones, beads, seashells, etc. Trade refers to process of transfer of goods or services from one person or entity to another, often in exchange of money. Trade has evolved drastically over the years. First, it was the direct exchange of goods and services for other goods and services. Then, it went to the exchange of goods and services for precious metals. This barter system was replaced by exchange through use of money. And today, this exchange takes place through non-physical money. The location of Indian subcontinent is strategic, as it has Himalayas on the north, Indian Ocean in the south, the Arabian Sea on the west, Lakshadweep Sea to the southwest, and the Bay of Bengal on the east. This location has an important bearing on its economic and social development. Archaeological evidences prove that trade and commerce were the foundation of the economy and were carried out both through land and water. The emergence of Silk Route fostered commercial and political links with the adjoining foreign kingdoms and empires of Asia as well as the world. On the other hand, maritime routes linked the east and the west by sea and were used for the trade of spices and branded as spice route. The trade progressed tremendously with the flow of wealth through these routes. The chief kingdoms, important trade centers and the industrial belt, flourished during ancient times in India. Many different types of coins and weighing practices were used, varying from place to place.
Just now you have seen a video which related to the trade and commerce. So trade refers to the exchange of goods and services. During barter system, the goods and services are exchanged with the other goods and services without the money matters. But as a time proceed, the goods and services is exchanged by giving a money. What do you mean by accountancy? In the year 1941, the American Institute of Certified Public Accountant (AICPA) had defined the accounting as an art of recording, classifying and summarizing in a significant manner and in terms of money, transaction and the financial character. This means that when accountancy means the art of recording the transactions, the goods which are exchanged between one another, it should be recorded so that it acts as a evidence in the future purpose. Then it should be classified and summarized in the significant manner and in terms of money. Only those transactions should be considered in the accountancies which is in the monetary form, that is in the cash. Other than the cash, it should not be entered in the accountancy. Only the financial character should be included in the account. Whether you understand the term, what do you mean by a trade and a accountancy or a commerce? In a simple term, A trade is a process where the exchange of a goods and services take place. In the commerce, the transaction of the transactions of the entries take place. And in accountancy, only those transactions which are in the monetary form should be recorded. Now we have understood the concept of accounting, but the history of accounting. Now we are beginning with the history of the accounting, how the accounting take place, or how the transactions, which country has recorded first transaction. Now let us see what happened during the ancient time. Accounting started in Babylonia and Egypt around 4000 BC. Recorded transactions of payments of wages and the taxes on the day tablets. The wages and the taxes on the day of a tablet were recorded in the Egypt, that is in Babylonia, in 400 BC. Romans used the memorandum or the day banks where in the receipt and the payments were recorded 700 BC to 400 AD. In the Romans, the bank were recorded the receipt and payment in the year in the ancient times 700 BC to 400 AD. China formed a government accounting as early as 200 BC. The first country, the China, has recorded the accounting as early as in the 2000 BC. In the year 1494, that is 1494, first book of double entry bookkeeping has been done. So this is the history about accounting. In the year 4000 BC, the first transactions is done in the Babylonia and the Egypt. Then afterwards, in the Romans used the memorandum in the year 700 BC to 400 AD. History and the development of accounting. Accounting enjoy a remarkable heritage. The history of accounting is as old as a civilization. The seeds of accounting were most likely first sown in the Babylonia and Egypt around 4000 BC, who recorded the transactions of a payment of wages and taxes on the clay tablets. Historical evidence reveals that the Egyptians used some form of the accounting for their treasuries where the gold and other valuable were kept. The in charge of treasuries had to send day-wise report to their superior known as a wazirs, the prime minister, and from 3 months wise a report were sent to the kings. Babylonia, known as a city of commerce, used accounting for the business to uncover the losses taken place due to the frauds and the lack of efficiency. In Greece, the accounting was used for apportioning the revenue received among the treasuries, maintaining the total receipt, total payment, and the balance of the government financial transactions. Romans used the memorandum or the day book wherein the receipt and the payment were recorded, and the China used the sophisticated forms of government accounting as early as 2000 BC. Accounting practices in India could be traced back to the period when 23 century ago. Kautilya, a minister of in the Chandragupta's kingdom, wrote a book named Arthashastra, which also described how the accounting records had to be maintained. Luca Paciolo's, the Franciscan friar merchant class book Summa di Arithmetica Geometria, popularly at the proportions at the proportionality, review the arithmetic and the geometrical proportions. In Venice, 1494 is considered as the first book on the double entry bookkeeping. A portion of this book contains knowledge of a business and the bookkeeping. However, the Pacioli and did not claim that he was the inventor of a double entry bookkeeping but spread the knowledge of it. It shows that the probably relieved on the current bookkeeping manual as the basic of the masterpiece. In his book, he used the present day popular terms of accounting, debit, and credit. These were the concept used in the Italian terminology. Debit comes from the Italian debitio, which comes from the Latin debitia, and debio, which means owned and to the property. Credit comes from the Italian creditio, which means the Latin credo, which means the trust or the beliefs in the proprietor or owned by the proprietors. In explaining the double entry system, Pacioli wrote that all entries have to be double entries. And that is, if you make one creditors, you must make some debtor. He also stated that the merchant's responsibility including to given a glory to the gold in the enterprise, to be the ethical in all the business. Now I will ask you some questions related to the history and the development of accounting. In which country the first accounting transaction take place? The answer is Babylonia and Egypt. And in which country the first recipient payments were recorded in the 700 BC to 400 AD? The answer is Romans. Dash form a government accounting as early as 2000 BC. The answer is China. In which year the first book on the double entry bookkeeping discovered? In the year 19 in the year 1494, the first book on double entry bookkeeping were recorded. Now we are moving towards a new concept, that is economic event. In the simple word, economic event is nothing but consists of a transactions in which measurable in terms of monetary terms. Monetary terms means in terms of a cash. Now we will go in details about economic events. Business organizations involves the economic events. An economic event is known as a happenings of consequences to a business organization which consist of a transactions and which are measurable in terms of monetary term, that is in terms of a cash. For example, purchase of machinery. In order to purchase a machinery, a businessman required money to purchase it. Installing and keeping it ready for the manufacturing is an event which comprises number of financial transactions such as buying machine, transportations of machine, site preparation of installations of a machine, expenditure incurred on its installation and trial runs. Thus, the accounting identifies the bunch of transactions relating to the economic event. If an event involved the transaction between an outsider and the organization, these are known as external events. The following are the example of such transaction. First one is sales of merchandise to the customers, rendering the services to the customer by ABC Limited, purchase of material from the supplier, payment of monthly rent to the landlord. And internal events in an economic event and that occurs entirely between the internal wings of the enterprise. Example, supply of raw materials or the components by the stores departments to the manufacturing department, payment of wages to the employees, etc. Identifications, it means determining the what transactions to be recorded, that is to identify events which are recorded. It involves the observing the activities and selecting those events which are to be considered in a financial characters and relate to the organization. The business transactions and other economic events therefore are evaluated for deciding whether it has to be recorded in the books of account. For example, the value of human resources, change of management, changes in the managerial policies, uh, or appointment of a personals are important, but none of these are recorded in the books of account. However, when a company makes a sales or the purchase, whether on cash or credit, or pays salary, it is recorded in the books of account. The first concept is about identification. In this identifications, the business has to the businessman has to record all the activities which are in terms of monetary terms under the recorded under the books of account. Second concept is measurement. It means quantifications including estimates of a business transaction into the financial terms by using the monetary units. Example, rupee and paisa is a measuring unit. If an event cannot be quantified in the monetary term, it is not considered for recording the financial account. In the simple terms, the only the quantifiable items in terms of a cash, that is a rupee or the paisa, is recorded in the measurement concept. Third one is a recording. Once the economic events are identified and measured in the financial terms, these are recorded in the books of account in the monetary terms and in the chronological orders. Recording is done in the manners that the necessary financial information is summarized as well as per the well established practice, and is made available as and when required. It acts as a the recording is very important because it acts as a evidence in the future course Fourth one is a communications. The economic events are identified, measured and recorded in order that the pertinent information is generated and communicated in certain forms of management and other internal and external user. The information is regularly communicated through the accounting reports. These reports provides the information that are useful to the variety of users who have an interest in assessing the financial performance and the position of an enterprise, planning and controlling the business activities, and making necessary decisions. The communication is very important because the users are looking how the financial activities are taking place. The other related informations is very important to the investors, especially the investor who want to invest your business. In simple term, the four concepts are the identifications, in which the those activities should be identified, which is in the monetary form. Second is a measurement means quantifiable items, that is in the monetary form, like for example rupee, paisa, etc. The recording is very important, and it should be recorded in the chronological order. Fourth one is a communication is very important for the users, especially the investors who want to know about your business. Now tell me, what do you mean by a measurement concept? The answer is measurement is nothing but a quantifiable item which is in the monetary form. For example, like paisa, rupees, etc. The second one is a recording, and the enterprise should be recorded. So all the recording is very important in the monetary form, and it should be in the chronologically. We have learned about the meaning of accounting, the history of accounting, and the economic events. And the four economic events in that we learned the four concepts, that is identifications, and then measurement, recording, and communication. Now I will ask you some questions. What is the meaning of accounting? The answer is in the year 1941, the American Institute of Certified Public Accountant AICPA had defined the accounting as an art of recording, classifying, and summarizing in the significant manner and in terms of money, transaction, and the financial character. Second question is how accounting emerged in the ancient time. The answer is accounting started in the Babylonia and Egypt in and around 4000 BC. Recorded the transaction of a payment of wages and the taxes on the day of on the clay tablets. Afterwards, the Romans used the memorandum of day book where the in the receipt and the payments were recorded in 700 BC to 400 AD. China formed a government accounting as early as 2000 BC. 1494. In 1494, first book of double entry bookkeeping were recorded. Explain the concept of measurement. The answer is measurement is nothing but in the monetary form, that is in the cash or the in the rupee, quantifiable items in the rupee or in paisa. Recording the each and every transaction which is in the monetary form should be recorded in the books of account, and it acts as a evidence in the future courts. Now I will give you the home assignments based on the today's topic. You have to collect the information of how the accountancy concept came in our country with the help of the internet. We have learned about how the accounting concept emerged in the world, but how you have to know about how the thank you for listening to me and have a nice day.